welcome to NC Real Estate's YouTube channel. My name is Natasha Collins and I am the founder of NC Real Estate, including its members club, which is a place for landlords and property investors to come together and create financial freedom through property investing. Today I want to talk to you about the pros and cons of shared ownership, because it's something that actually needs to be highlighted because I don't think enough people know about it. So what is shared ownership? Well, it's part of the Help to Buy scheme in the UK. Basically, if you're a first-time buyer, you can go to a property that is probably more expensive than you can usually buy, and you can buy a percentage of it. So that could be 25%, 35%, 50%, 75%, whatever you can afford to buy at the time that you're purchasing. In theory, this sounds like a really good idea, and the pros are that there is a very low barrier to entry. All your mortgage is based on is the share that you're buying, so you only buy if it's 25% and the property is worth 400,000, then you only buy £100,000 of the property. You then put down a deposit for, say, around 10% of that, so £10,000. You get a mortgage for £90,000, and then on the other £300,000 worth of property, you pay rent to whoever the shared ownership provider is. So in theory, that's an awesome thing for you, because actually you think, you know what, I'm buying a property and I'm able to do that with only £10,000. And of course, at the moment, within the first time buyer scheme as well, there is no stamp duty land tax payable. So if you were to buy it at 25% and elect to pay all of the stamp duty up front, fantastic, you have a 0 rate stamp duty. Of course, there's exclusions there, so make sure you check that with your solicitor. So those are the pros. But the cons of this, I do not think are actually told to people correctly, and this is something that needs to change, because I've seen it firsthand with people that I've worked with, and also me discussing it with the Ministry of Housing, that there are some absolutely huge flaws with this, and especially as we're moving into a market where actually property prices could be coming down. So cons, number one is you have to pay rent on the other however much the percentage up until 75%. So if you own 75%, there's no more rent payable the other side. But if you don't owe up to 75%, you have to pay rent on the other share of the property. Now, this is at the discretion of your housing provider, so you need to check out how much rent that's going to be before you sign up. You will also be responsible for 100% of the service charge on your shared ownership property. And in some cases, this can be £250 a month, £300 a month. It can be extortionate. So you do have to take those costs in. And if you want to then actually dispute them, it can be really tough to do that, because you have to do that through whoever owns the other percentage of your property. So you have to be really, really wary of that. It can be really tough to get that brought down. And especially because shared ownership properties actually don't have access to as many of the services as other properties in the building might have, or there could be some restrictions there. So make sure that you're paying the right amount of money, but do bear it in mind that it could be more tough for you to argue an overly expensive service charge. So that's one of the cons. It's all the additional costs that come with owning a shared ownership property that you might not have taken into account when you first started applying for it. The second con with shared ownership is that if you're buying a part of a property, your mortgage rates are going to be far higher than if you're buying 100%. Your mortgage interest rates will start at somewhere like 3.5%, whereas if you're a first-time buyer on 100% mortgage, you can get that lower, somewhere in the 2s. Yes, even with the new Bank of England interest rate hikes. So that's really the difference. You're going to be paying far more to borrow with shared ownership, right up the way up until you borrow 100%. So do keep that in mind, that sometimes actually, if you're going to be buying a property that is like £250,000, why not see if you can get one of those 5% or 10% mortgages instead? Save up the deposit. Yes, it might be a little bit bigger, but actually in the long term you end up paying far less on the money that you're borrowing, and that's a huge thing. You can reinvest that in something else, even £200 a month into a really, really high interest rate savings account or investment can do wonders for your wealth as you get older. So it might be something really worth considering. Con number 3, and one that winds me up, I think this is ridiculous. If you buy your property, say at £400,000, seeing as that's the example we're going with, and you buy that 25%, when you come out to staircase, so staircasing is buying the additional amounts, every single time you want to buy another percentage, you have to have another valuation done at a cost to you, so that's going to cost you about £300. Then that valuation will come out with the new valuation of your property, and that's the amount that you pay for the next percentage. So for example, if your property's then gone up to £500,000, and you want to buy out another 25%, well, you're going to be buying out the 25% at £125,000, not the original value. And that means that as property prices increases, it's going to become less and less and less affordable for you to buy out that property. In fact, it might make it that it's not reachable at all. It's not going to be something that you're going to be able to do. So you're cementing yourself in this home, you're putting your roots down, and actually eventually you can't buy out 100% anyway. It can really snooker you. And then of course you're having to borrow more money, and that can be a real issue. It can stop people from buying out any more of their property altogether. The only plus side of that is that the first share that you buy will have increased in money, so you'd made equity on that. So that's a real plus. But if you're still not earning any more than you were when you bought out the first percentage of this property, then chances are you might not even be able to qualify for the increased lending anyway, which is ridiculous. Like, it's absolutely mind-blowing. So just do be very aware of that every time you're going to staircase, you're going to increase your percentage, you're going to be buying out at the value that it's worth on the day that you're trying to staircase. You get a new valuation. The only time it will start working in your favour is if the mortgage market or the property market is going down. Then of course you're buying your share for cheaper, but that means that you've lost money on your first share that you bought anyway. How annoying is that? Like, it's absolutely frustrating, and I do not think that it gives first-time buyers who would hope to buy their property and actually be on the property ladder a fair chance at being able to buy it out, which actually is absolutely ridiculous. The next con that I've also seen is that when you come to buy out 100%, obviously you're going to be wanting to get 100% mortgage. So you want to get a mortgage over the whole of the property, and if the property value has gone up way in excess of what you were originally able to afford, even if you've got a little bit more money, even if you've got equity, chances are that you might not be able to get a mortgage on 100%, so you're kind of stuck where you are. And in the market where property prices could be coming down, we're kind of at that stage at the moment where the market is pretty volatile. You don't quite know what's going to happen. Say the lender who is lending to see that you can buy out 100% of it, or the valuer who says that you're going to be able to buy out 100% of it, comes and values the property at say £550,000, and they give that to the person or the entity that owns the rest of the share of the property. That's the price that they're going to be expecting you to buy out 100% of the property for, so that £550,000. If you then go out and try and get a mortgage, and the mortgage lender's going, well, hold on a second, this market is volatile, what do you think you're doing? And they value it, say, at 510, you're absolutely screwed, because quite frankly, you can't get lending for any higher than that. Either you're going to have to find that extra £40,000 in cash to top it up. You might be able to use it from your equity, but lenders are quite hesitant to do that. Alternatively, you're not able to staircase and buy out 100%. It's so frustrating. Like, it is absolutely horrendously frustrating, especially because as first-time buyers, you're wanting to have that 100%. That's the goal. You're wanting to get there. And in an upwards moving market, chances are that will take you an awful lot longer. And even in a market that's coming down, if then your original share is worth less than you paid for it, your mortgage lender's going to go, well, we're not moving on this because actually you're in negative equity, so you owe us money. There is no win-win solution here, and this is why I would actually not suggest that anybody does partake in the shared ownership schemes. Yes, at the beginning it looks all rosy, it looks amazing, but actually as you continue through that, if your goal is to then buy out 100% of the property, it's going to be quite tough to get there. Instead, what I would do is I would save for that little bit longer. and then go to a mortgage lender and get a mortgage based upon how much you've saved and how much your income is. There is the option of getting third-party mortgages at the moment where you can get someone else to guarantee them, which is fantastic if your parent or a sibling or any member of your family is prepared to guarantee that on your property. Do that. Try to buy 100% wherever you can. The minute you're getting into these Help to Buy schemes, you are getting snookered. You can't do anything with the property apart from living in it yourself. So if it becomes too expensive, you can't rent it out. There's clauses that prohibit you from doing that. Seriously, you have far more control over your property if you buy 100% out. No matter which way you're going to do it, make sure that that's the thing that you aim for. And if you have a look back through past YouTube videos, I've put loads and loads of ways that you can save up for a deposit and go and get a mortgage that way. So I really would recommend it. And this is all going to come out a little bit more as we go through over the next couple of years, as that market volatility really hits and shared ownership becomes a bit kind of like, how do we get out of this? And it's something as well that I'm not just saying on here, I'm actually taking it to the Ministry of Housing, because I feel like this needs to change, because first time buyers do deserve to get on the market and they do deserve help, but they shouldn't come at a cost where actually they can't do anything else. So you have my warning. If you're looking at shared ownership, please also have a look at other ways in which you can buy out a property 100%. Yes, you might need to come down in the amount that you're borrowing and the amount that you're looking to buy for, but actually in the long run, having that 100% control is far more in your favour, and hopefully that property will go up over time and you can keep remortgaging, increasing your equity and decreasing your loan to value, so bringing down your interest rates as well. That would be my suggestion. If you need any more help with that, or you want to just put a comment below and say, this is what I found, I would love to hear from you. I want to hear of your experience. I also want to hear what you think based on the back of this video. So would you invest in shared ownership? Comment below. Then come over and see me at www.ncrealestate.co.uk, which is for all of your property investment needs. I want you to be making money from property. So I hope you've enjoyed this video and I hope it's been super informative. If you have, hit like and subscribe to my channel so that every single week you get new updates from the property industry. Thank you very much for watching, and I cannot wait to see you again soon.